And as we've been reporting today, we saw a big jump in home sales during July, the biggest, in fact, increase since 1999. Let's get some perspective on the housing market. For that, we're joined by Patrick Lashnisky, the president and CEO of ZipRealty. Welcome.
Hi, thanks.
Well, if you look at the market reaction to the existing home sales report, you have stocks soaring, bonds are selling off. Is it fair to say we're seeing consistent improvement in the housing market?
We are. We're seeing, for the first time in 5 years, we're seeing 4 straight months where the number of homes sold has actually increased. And that's a really good sign. The other thing that's nice is that inventory levels are actually starting to come down in most of the markets. They're still high relative to where they normally would be, but they're coming down, which is a positive trend that we've been waiting to see.
But, Patrick, the sales are up, but the valuations are down, aren't they?
They are down. They've been down over a period of time, but the drop has actually decreased over the last couple of months, finally. So we had been on a steep decline of 20 to 30% declines on a month-over-month basis, and now we're seeing that decline really kind of moderate and kind of hit a baseline.
Patrick, people seem to be breathing a sigh of relief that inflation isn't a front-burner problem, but I'm curious if the Fed wants to see a certain level of inflation to reflate those house prices to help especially those underwater mortgage holders get back on their feet?
I think right now the key that the Fed is really looking at is just keeping stability in the market and keeping volume going. And it's probably more important that we get the inventory that's currently on the market and make sure that there's demand and that there's activity. And those homes are being sold more than they're worried about people who are underwater. If you're not going to sell your house right now, it doesn't matter what the value is. It's very similar to a stock portfolio.
But what is being sold right now, the lower priced homes, nobody's trading up.
That's right.
There's a glut of luxury homes on the market right now because people are either holding on to their money or they just cannot afford this.
That's exactly right. We're actually showing about a 40-month inventory of homes over $1 million.
40 months?
40 months of inventory right now. Typically, we would expect that to be between 12 to 15 months. So you're exactly right. The high-end price, and that's being driven by the financials. The current market and the mortgage backs aren't willing to lend to jumbo homeowners. And so basically lower end are where they're able to get capital, and the banks are willing to lend to anybody that Fannie and Freddie will support and they'll buy those loans.
Mortgage rates did come down, though. Will that spill over to the luxury end?
It is not. The gap continues to be between 1.5 to 2 points difference between those two markets, and that is keeping affordability even more difficult in the higher end market that you were talking about.
And you say 1.5 to 2 points. It seems small, but it's not. In relative dollar terms, that's how much?
That's gigantic. Well, if you're saying that you would typically be able to get right now a nice kind of conventional loan for 5.5% and you go to 7%, that is a very large percentage relative to the terms.
How exposed, though, is the luxury home market to the job market? You would think it wouldn't be so much.
This is the first kind of period of time where we've seen where the jumbo market is really being adversely affected, driven a lot by the market and driven by not only is it the housing or the economy and the job market, but it's really being driven by what's happened to stocks. And the people that would typically be buying those are more heavily weighted towards their stocks. And previous to this 40% return that we've seen in the last couple months, their valuation in their portfolios had dropped so dramatically that they don't have the capital that they usually would have.
Patrick, what's going to happen if that $8,000 first-time credit for home buyers, what's going to happen if that's not renewed?
Well, we'll definitely see a slowdown in demand, and we will definitely see the lower-priced homes not have as much activity. Right now, part of the reason why we're seeing a spike is that buyers know that they have until about October 15th to find a home, to have a chance to close by November 30th.
And you saw a lot of anecdotal evidence to that effect, correct? Because as soon as that $8,000 tax credit became available, people who were thinking, well, I'll continue to be a renter, they said, you know what, maybe we can afford a little bit more. Let's get that tax credit, and the money that we're going to spend to buy that home, we're going to make up in the credit.
That's exactly right. And we've continued to see that. And part of the reason why you're seeing the lower home prices is because people are buying first-time home and they're using the $8,000 credit to try and get into it. If that goes away, I expect that in December and January, we'll see a pretty big decline in the number of homes that are being sold. Hopefully, there is a bill before Congress right now to extend this bill, the credit out through June of next year, and hopefully we'll see that get passed. It's very important for the housing market.
And Patrick, what are the builders thinking of these numbers? Are they taking it as a signal to start building more, at least on the lower end, as you were describing earlier?
Well, I think that we've seen that builders are finally starting to have a little bit more confidence. They're starting to feel a little better than they did. We're still not seeing speculation houses being built, but the percentage of homes that are being sold that are new homes relative to what they were 6 months ago is starting to go up. And so we are seeing them become much more active. We're seeing them become more aggressive in their stance, but they're still not going after doing speculation homes right now.
Patrick, could I ask a question going back to the higher end homes again?
Sure.
Are we seeing a lot of people now, they realize they can't can't sell these homes, so they're biting the bullet and say, well, as opposed to just letting them sit empty, let's rent them out. Are we seeing a lot more of that?
We are definitely seeing a lot more of that. We're definitely seeing the high-end sellers, and they're even testing the water. We're seeing high-end sellers that'll put their home on the market for 90 days to see if someone will bite. And if not, they're pulling them off, they're leasing it or renting it out and saying that, we'll get someone into this house for a period of time to help us get through till the market stabilizes back to a point where there are people able to lend and there are people able to buy these homes.
And as we wrap up here, what are the additional signs to look for to see continued improvement in health in the housing market?
Well, we need to see that the middle part of the market continues to get some gains. We need to see that home prices are increasing a little bit faster than inflation. We need to see that the volumes continue to increase. And we need to see people that aren't just at the low end, first-time home buyers getting gains, that we're seeing the gains in that middle area, which is where the next wave of growth really needs to come through.
Many thanks.
Thanks.
Thanks so much. Patrick Lashnisky, CEO of ZipRealty.